Ladies and gentlemen, mic test, mic test. Please let me know that you can hear me in the chat box. Share this stream with everybody that you know. Send them the link. Hit the share button. Send them the link. Hit the share button. Send them the link. We are getting started answering the question, why is the stock market collapsing? We are getting started. I've got your chat right here. All right. So, what is going on, everybody? Welcome to another live stream today, answering the question that all of you guys have been asking me publicly. Why is the stock market collapsing? Now, before we answer that question, I want to first go through just some of the highlights of what we have experienced today alone. And this, again, for those of you guys that are watching this with me, we are live here on the 5th of August at approximately 12:35 p.m. Eastern Time, 9:36 a.m. Pacific Standard Time, if you're with me right now. Japan saw the worst day in their stock market's history since 1987. South Korea saw the worst day in their stock market history since 2008. The Dow dropped over 800 points, actually almost to 1,000 points. The NASDAQ has hit over 3% correction, actually hit and tapped a 4% correction just today alone. Bitcoin smashed through 50K, hit the 40s for the first time in quite some time. Ethereum fell down below $2,200 a coin. That was over a 22% correction in just one day. The entire market was shattered today. Regardless of what you own, I don't care if it's gold, I don't care if it's silver, certainly less than the rest, stocks, crypto, the market is bleeding. And that brings me to the topic of today's live stream. Again, share this stream with your family and your friends. We're talking about the question, why is the market collapsing? Now, for those of you guys that have me on Facebook, you know how it is with passwords. I don't know which browser I have my Facebook on. Let me try this one. Oops, let's go to Facebook. If I go to my profile, I want to first pull up, if this will load, right here. Hopefully you guys can see this. What is going on in the markets? Hopefully you guys can see that okay. So I'm going to go through this post, but in video format with some extra context so you guys really understand what the hell's happening. Put a 111 in the chat if you've asked yourself that question in the last 24 hours. What the hell is happening in the markets? I'll tell you what's happening. Last week we saw a surprise rate hike out of Japan. Now, for those of you guys that don't know, Japan has held their rates historically low for many years, going before COVID. And so their interest rates have been low for a very long period of time. And what that has done is slowly but surely enticed investors from outside of Japan to be interested in investing and, or rather borrowing money from them so that they can invest it elsewhere. Remember what I just said, because that's the tip of the iceberg. So they've kept these rates low for years, which is allowing investors from foreign countries like the United States, for example, to go to Japan and borrow at extremely low rates. It's cheap money. It allows them to borrow this money with an extremely low rate of interest. Now, they borrow that in terms of a yen. And then what they do is they bring it to wherever they are at. Say in the U.S., they bring it over here to the U.S. and they buy U.S. bonds, treasury bills, treasuries. And when they do that, they convert the currency, they buy it, life is good. At least, pause. That's how it is supposed to be. Now, why do I say that's how it's supposed to be? It's because this is known as a carry trade, and it works only when and only if the rate of return where you're investing remains good and high, and the rate of borrowing, aka in Japan, remains good and low, except for there's a kicker. Japan, with these low rates, faced two glaring issues. Number one, higher inflation was happening since rates were lower. You guys remember what happened in the US when we reduced rates, right? Inflation starts to go up and up and up because people are able to borrow money. And when they're able to borrow money, what happens? They're able to go spend it, which creates more money. But number two, and probably the more challenging, because rates were low, the yen became very, very weak. For those of you guys that didn't see this, prior to what just happened, this is the value of the dollar versus the yen. Now, ignore my position short right now. What's more important is, look at this. You see what happened? That is the dollar gaining value over the yen. Not just since January of 2023, but how about 22, 21? We haven't seen this upside stop since the start of COVID, basically, in 2020. Every single month, I can go to the weekly time frame. What did we see happen? We saw the value of the yen get weaker and weaker and weaker against the dollar. When this chart goes up, it means the dollar is getting stronger against the yen. Now, why do I bring that up? And what's the challenge with that? Well, with a country like Japan that imports majority of their goods, when you're importing something, there's a challenge. Because rates were low, I'll highlight where I'm at so you guys can follow along. Because rates were low, it made the yen extremely weak, which made importing food and goods very expensive in the country that relies heavily on imports. And so the BOJ had to make a choice. The Bank of Japan. They had to make a choice. What was the choice they had to make? They had to decide, do we A, continue going down the path we're going down and basically get pummeled into oblivion? Or B, do we start to raise rates, making it domestically a little bit more difficult for our country because it's going to spur a slowdown in inflation, but stopping the rest of the bleeding? And that's what they did. What they did is they raised rates. And when they raised rates, what happened to the value of the yen? The value of the yen absolutely skyrocketed. This is the value of the yen, by the way. Just the yen alone. Look at this. Skyrocketed. Now, why do I bring that up? Because when the value of the yen skyrockets, what happens against the dollar? You see that percentage? The dollar, in just the last week alone, has lost over 10% of its value in yen terms against the yen. Now, why is that important? Well, let's go back to the beginning when we talked about this carry trade. All of those, what we call foreign investors, but those of us in the U.S., that's us. All of these foreign investors going over to Japan, borrowing money at an extremely low rate, bringing it to the U.S., converting it via a carry trade, and investing it into treasuries. That's fine. There's an arbitrage there between the borrowing rate and the yield. If you're borrowing it at 2% and you're yielding 5%, that's a phenomenal business. Except for here's the kicker. What if in 1 week, for you to convert it back into the yen and pay down that debt, that conversion is going to cost you 10% more? Most of these investments didn't even make 10% a year. They made 4% because they were in treasuries, or 5%. And so what happened at this point in time? Think about it for a minute. Panic starts to ensue. It puts the borrowers in a terrible spot, which is right now. With higher loan amounts and interest rates, they are now forced to sell these foreign assets to cover the newfound cost because of this massive conversion. And this creates what's called a liquidity cascade. What does that mean? A liquidation cascade. Very simply put, guys, what this means is they then have to go sell their bonds, they have to sell their stocks, they have to sell their gold, they have to sell their crypto, they have to sell. And it's like there's a bunch of people trying to exit, yet there's still not enough exits. And in doing this, this has caused a global market sell-off because there was this infinite money glitch that had been taken advantage of by countries for years, borrowing money extremely cheap in Japan, moving it over, investing it into fixed assets or very stable assets in the US or anywhere else, let's face it, and doing it over and over and over and over and over again for years until, guess what? The piggy bank of Japan, it just shut its doors. It said, no more for you. We're raising rates. And because we're raising rates, guess what's going to happen to the value of our currency? It's going to skyrocket, which is going to make it more expensive for you. You're going to stop doing this. And secondly, now you have a choice. And here's where it gets dangerous. Is the U.S. going to reduce rates in the next 90 days? I'll share with you. Is the U.S. going to reduce rates in the next 90 days? Right now, our probability stands at 100%. We have a 15.5% chance that we reduce rates by 25 basis points, which is 0.25%. And we have an 85% chance that we reduce by 50 basis points, which is 0.5%. Now, if you've got rates going up in Japan and rates going down in the U.S., guess what just happened? It makes this even worse, which accelerates the exodus that you're currently seeing in the markets. The VIX saw one of the largest spikes it had ever seen in history. It went to the third highest level in history. This is the Fear and Greed Index. The only two other times that it's ever been higher was the Great Recession of 2008 and the collapse of COVID of 2020. And so that brings us to today. Now you know why this has collapsed, but the more difficult question that I'm sure a lot of you guys are asking is, what do I do with this information? How do I make this happen? What should I do? Well, first and foremost, for those of you guys that have been paying attention to what I've been speculating, I've been talking about TLT publicly and privately. TLT is a ticker for an ETF that tracks the 20-year Treasury bonds. As we expect rates to come down in the United States, as rates go down, the value of bonds go up. And so I'm bullish on TLT. This is a hedge play because when this goes down, generally equities and stocks go up. However, when this goes up, the opposite goes down. And so as a hedge to protect against potential further losses, I am buying TLT and looking to add more TLT to protect because, again, what that does is just hedge. That means if the stock market goes down in my current positions, at least I have something going up. Look at what happened here. This is Monday. This is last week. Let me zoom in here. Here's today. You can see it spikes to today and then pulls back. This, my friends, is important to watch because we expect them to reduce rates. And if we expect them to reduce rates, then we expect the yield curve to continue to fall off a cliff like it is right now. And if we expect that to happen, we expect bonds to go up. But number two, here's where the bigger picture comes into play, folks. We now know why it's happening. There's this mass hysteria, there's mass fear. A lot of you guys, maybe you've never experienced something like this. So how do you get around it? Well, you go back to the basics. What are assets that you guys can think of in the chat box? It can even be stocks that over time, historically, with 10-year runs, has provided great returns. Is it an index fund? Is it commodities? Is it crypto? Is it a bond? What is it to you? You start naming these sort of things. Remember, now it's a mindset portion. That's simply it, my friends. That's it. Now what we have to do is we have to say to this, now that we see what's correcting, why it's correcting, how do we take advantage? Now, for those of you guys that are newer to the VIX, what I can tell you is when the VIX hits 45, that's my first trigger day. So once the VIX hits 45 on massive collapse days like we've seen today, these are days where I actually consider adding to the markets. The reason being is the VIX, other than COVID in 2008, every other time the markets have corrected after hitting 45. Here we go, here we go, here we go. There's 2008. Here we go, here we go. You can see it repetitively. So I bring that up because historically, other than COVID in 2008, every other time the VIX has hit this level of 45, It is swiftly within the next several weeks corrected back to the upside. This looks very good for those of you guys that are holding equities. But it's important to recognize the downside pressure and the risks, because it doesn't look like Japan's going to stop what they're doing, and it doesn't look like the U.S. is going to do anything different. And so those two ripping apart is what's causing this. Remember, when the dollar goes up in value, the yen goes down. When the yen goes up in value, the dollar goes down. And right now, with the yen raising rates, Japan raising rates, that's going to increase the value of the yen. We've already seen this. And then now that we know in the U.S., we are inching closer to rate cuts. When you cut rates, what happens to the value of a currency? It goes down. Those two rip from each other. They rip. One gets stronger, one gets weaker. That conversion, that carry, is what's causing this pain. And so that's only going to get worse. For those of you guys that Forex traders, I encourage you to look at dollar yen short. I've already been looking at that and already been working on that since last week of the surprise hike. Last week, surprise hike. That's last Wednesday in yellow. That's the candle. Boom, there we are. You can see already this is about a 650, 700 pip runner to the downside. So how are you guys going to approach this is my question. A couple of you guys answered real estate, the S&P, the NASDAQ, all these sort of things. Regardless of your answer, I hope you now know why the stock market is collapsing. Because if you understand why, it helps you to understand where I need to throw money, what I need to avoid, what I need to go after. In times of despair, there's great opportunity. Look at Bitcoin today. That's a time of despair. Already, that's a $5,000 clip to the upside on BTC. That's incredible. Take a look at Ethereum. Ethereum. Yeah, it crashed today. But take a look, 2,100 back up to 2,400. That's $300 per coin. The point is, guys, there are opportunities. Absolutely, without question, there are opportunities in the markets. It's just you in the mind. It is a very difficult thing to do, to look at markets like they are today in the midst of downturn, all across the board, silver and gold a little bit, they're faring the best. But it's very difficult for any human being to say, this is collapsing, right? And I'm going to buy it. But in times of massive fear, you have to be aware that there's never going to be the feeling where you're like, oh yeah, it's got to go up. It never exists. You then have to decide, what is my time horizon? What's the asset that I'm invested in? And do I believe in the asset long term? See, here's the difference. Here's how I look at this. If you guys today are saying, man, I might be interested in investing in, I don't know, the NASDAQ, which, by the way, is still only down 2% on the day. If you said I might be interested in investing in the NASDAQ, my question for you would be, okay, it's not of whether or not you think it's going to go up. It's how long do you think that you're going to invest in the NASDAQ? How long do you think that you are going to hold the position? See, the people that get in trouble are the people that need out of the position. So if you were to buy the NASDAQ today and it were to go down to 16,000, but you plan to hold it until 2046, the longer the period of time you plan to hold, the higher the probability you are of actually making money. See, here's where the trouble is. There's a lot of people out there that they're trying to get wealthy from trading. It's the first thing I always tell people not to do. Go get wealthy in business. Go get wealthy and start a company. Go get wealthy at your job. Go work overtime. Go sell something. Go make money outside of the markets. Bring it to the markets, and then be patient with the markets. See, the markets are just a transfer of wealth from the impatient to the patient. And so right now what you've seen is you've seen a bunch of impatient people that probably over-leveraged. They're probably borrowing money from Japan. They had to get out because of their time horizon. And now it gives an opportunity for people like us, maybe like you, that are patient and are saying, I'm willing to hold this for 1, 5, 10, 15, 20, 25, 30 years. See, that's what we need to recognize and understand, is that when people ask me, how do you think this will impact the crypto market or the real estate market or the stock market or this or that? What you must recognize, it depends on your time horizon. If you're trying to buy a piece of real estate for the next year, I wouldn't buy real estate today. But if you're going to buy that property and you think you're going to own it for the rest of your life, I would buy real estate today. See, if you're going to buy Bitcoin and you believe in Bitcoin, but you only want to hold it for the next 6 months, I would not buy Bitcoin today. Not saying it's going to go down, but saying your time horizon simply isn't allowing you enough pace, enough time. If you're going to say, oh, I'll hold Bitcoin for 10 years, there's another question. I think I would buy it today. It all comes down to you and your time horizon. And enough people in the markets, they just don't give themselves a long enough time horizon because they're trying to make active income from their investments when they shouldn't be. So to answer a few of your questions, how do you think the debt markets will fare, like private equity companies? Well, I think the current market conditions in general are getting more and more difficult. And so in saying that, as the market conditions get more and more difficult, private equity companies will probably start to fare not as good. I don't like private equity at all. I know a lot of people love private equity. I don't. And I think that it will start to get even more choppy in the next 12 to 24 months. Great question. What are your thoughts on how this can affect real estate? Well, I don't think today's action necessarily fully impacts real estate. I think what the deal with real estate is this is funny. I'm the opposite. I know that every realtor under the sun right now is excited about rates being cut. And I've been calling this for a year. I think once we start cutting rates, we'll see the exact catastrophe. Rates being cut have never historically been a good thing for the economy. Everybody acts like it has been, but go look it up. We talked about it even yesterday on yesterday's live stream right here on YouTube. And so in terms of real estate, I say that once we start cutting rates in the U.S., if we're talking about U.S. markets, the lower we go, the more and more people are going to look at that and say, man, that's our interest rate now. They're going to be more and more willing to sell. They feel locked in right now. There's a lot of people that have extremely low interest rates. They feel locked in. They don't want to sell because if they sell, they have to go buy a new house at a higher rate. As 30-year mortgages drop, as they get closer and closer, the difference between their rate and the current 30-year rate, the closer that comes, that's going to give them an opportunity to say, you know what, we could sell. We could go buy the house we actually want. We could get it at a very similar rate we currently have, and we could be happy and fine and dandy. What does that do to supply? It increases it. As supply increases, what does that do to prices? Decrease. So I think with rate cuts will actually come price decreases at some point here. It'll take a little while, but I think that's what will happen. Do you think Bitcoin might go below 50K in the coming days? I mean, I think we saw that today, obviously. We already saw that. And generally, when you see this reaction, especially as quick as we saw it, it's going to allow itself breathing room. I would give it a day or two of breathing before you even think that you'll see that again below 50. Give it a little bit of breathing room. For me personally, of course, I'm a little bit skewed here because I don't really care. I'm not adding. I haven't added. As you guys know, or maybe you don't know, my position, the last time I bought Bitcoin was 16.5. That's the last position I have. That's a real position, real money, not hypothetical. I don't bullshit you guys on the channel. I have it actually on the channel. You guys can look it up. But yeah, I bought it at 16,500. I bought one coin. So the current value of my portfolio is approximately $55,000. And so anyway, I'm not re-adding at this point. I'm not re-adding. I subscribe to power law theory. So I will only re-add if power law. Let me move this to log. Give me a minute. Give me a minute. I repeat, I will only be interested in adding to my Bitcoin position if it goes into the oversold power loss scenario, which would push me down into right now, current prices, low 30s, high 20s. That would be the only time I'd be interested in adding position. Current fair market value for Bitcoin, according to power law, is about $80,000. As you can see, the last time I bought was off of our purple line. And I'm only interested if we get down into these purples again. And by the way, the price I just mentioned wasn't even the lowest purple. The lowest purple puts you in the low 20s. So I am still holding. I'm not selling. I still believe in the cycle through 2025, bullish-wise. And I think that I will start to consider selling when it gets in the top yellow and orange bands of power law, which puts us just over $100,000 at current price. So in terms of borrowing, do you think corporations would rather wait to secure large financing or secure it now? I think they're going to want to wait to secure large financing. Look at the 2-year yield. It's falling. Everybody's expecting rates to cut. So I think that they're going to wait to secure financing. However, the challenge is corporations to secure financing is under the assumption that they're actually doing well. And let's face it, most companies are starting to not do well as we speak. Great session. Great session. As I've stated, guys, on social media and on YouTube, we are starting to become more active here on YouTube. You know, I got to be honest with you guys. I don't know if anybody can relate with burnout, but I've been doing finance-related content for 10 years since I was 18. I'm 28. And I got burnt out. I got so sick of making YouTube videos, it was disgusting. Like, I couldn't even get a camera in the car and just talk to it. And I know you guys would love that sort of content, but I really got burnt out. And I enjoyed this past summer. I went all over Europe. I really tried to enjoy my time and get away from it. And I got burnt out. And so what I decided to do was I said to myself, I like going live because there's audience interaction, there's comments, there's people. You guys are here. You're real people. You're human beings around the globe that I can communicate with. But doing a video, spending $500, $600, $700, $800, spending 3 days, get it edited, all that sort of stuff, just to get a few good job PK comments, it just wasn't doing it for me at that point. And you know, I've spent a little over $150,000 on my YouTube channel. It's made about 20 grand, so I've lost 100 grand making the content that I've made for you guys, which I'm not saying like shame on you guys for not sharing my channel by any stretch. I just got burnt out. Both financially burnt out, didn't really want to do that anymore, and secondly, just burnt out. And so now what I'm going to challenge myself to do is be live here, where I can come on live and then I can chop up into shorter videos, part of these long forms, so you guys can watch it in short and long, but primarily just come on live and enjoy this. Okay? So, yeah, any more questions on today's live? Any more questions? Any more questions? Yeah, let me grab this. I'll show you guys my summer. Let me show you guys. So, for those of you guys that don't know, I am invested in the ownership group of a couple of racehorses out of Germany. So I went to Germany to watch our horse race. Our horse was picked to get middle of the pack. It's like the Kentucky Derby of Germany. And our horse was picked to get the middle of the pack. This is from my viewpoint, by the way. And so our horse was picked to get middle of the pack, and I'll let you guys watch how exciting this is. This jumped the horse's value up quite a bit, so we were obviously financially very excited. So yeah, we had a good time. Went around Italy. That's us after we won the horse race. There's the horse race. This is at the horse race. This is us singing after the horse race. Actually, the guy sitting, this guy right here, that's the jockey. This is us in Germany. I had to fly out the next morning. This is like 10 p.m. that night. I had to fly out. A couple cocktails to say that. So good, so good, so good. Yeah, so amazing. So a horse went from, you know, our initial investment, small, to a, you know, a 7-figure valued horse. Oh. There he is. Argentum's his name. Palladium, excuse me. Argentum's our other one. Flying back. That's one of my friend's kids, Leo, riding on my head all day. Mom's birthday in San Diego.
Rudy, it's a pretty cool house, isn't it?
We had a lot of fun this summer. Rudy. There's Rude the man. One of my cars. Anyway, so just sharing a little bit about, for those of you guys that don't know me, a little bit about me and my life. So anyway, the importance right now, guys, is that you guys have the right information. You guys know what's going on, and you know how to attack it in the future. Really, your time horizon is the question mark right now. A lot of people are asking, should I? The answer is not a yes or no. The answer is, what's your time horizon and what's your expectation? If you say, should I buy crypto right now? What's your expectation? What's your time horizon? How long do you plan to hold? Should I buy stocks right now? The same thing. Should I buy real estate? The same thing. See, the shorter the span, the more risk you're giving yourself. The longer the span, you're actually reducing your risk. It's statistically impossible to lose money in the stock market, at least it has been in history, if you've held it for long enough. But the problem is a lot of people aren't willing to hold it long enough. And so that's where you guys just have to be aware of where you're at, what you're trying to do, and how you're trying to grow your portfolio. So let me grab something really quick. I got to find one thing. Nope, wrong portfolio. One minute, we are live. No, I don't want that. There we go. Let's try this. Analytics. So, growth. I just want to be, I want to show, like a lot of people, they don't show stuff. So this is Snowball Analytics. How many of you guys have ever traded Forex and you've heard of MyFX book? Put a 1 in the chat if you ever heard of MyFX book. So this is like a MyFX book for every one of my stock accounts. So I have a long-term account here, a $5 challenge account where we're growing an account with $5 a day. I have a fun money account that you don't want to look at because it's what it says, fun money. You're kind of messing around with things. And then you got a good long-term portfolio. And so the reason I want to share this with you guys is, it's important to see the ups and the downs. This is a portfolio that actually, for whatever reason, only shows till 2022. It should show longer. I've been investing with this portfolio far longer than 2022. But you can see, okay, I'm smiling, by the way. You can see what just happened. We're here. Last time we were there was January. This last week, my portfolio wiped out 7 months, 8 months of gains. I'm saying, and I realize all your online gurus are never going to show you stuff like this. It's all sunshine and rainbows in their world. But I'm showing you what it actually looks like. And guess what? I'm going to come back here on YouTube Live in however many years, and I'm going to say, I remember the day I was on YouTube Live showing this dip, and look how it didn't matter. That's the mindset I want you guys to be in. I'm in the midst. I can't guarantee you this, but I can almost guarantee you that in this live room, of these viewers, I've lost more money today than probably majority of you guys watching this right now. Financially, dollar value. Percentage-wise, maybe similar, but dollar value, some of you guys would probably puke when you heard the number. Guess what? It's important to recognize that's okay. We have to battle. We have to battle. Right now, of course, I'm still exposed to equity markets, and so that's part of this reason. Of course, I'm exposed to that. I'm extremely exposed in tech. I mean, I added NVIDIA and Broadcom just recently. I just added Starbucks, who's down over 50% recently. So I'm adding risk on assets. In the midst of uncertainty, everybody going, wow, you're a lunatic. Maybe I am. But guess what? I believe in the company's value. I believe Starbucks will be around in 20 years, 30 years, 40 years. I think Broadcom will too, and NVIDIA for sure. Well, Patrick, I think it's overvalued right now. Good, right now. I don't think it's going to be overvalued where current price is in 30 years. That's what I'm betting on. That's the difference. There's the difference between being an all-out trader and more of an investor. And I'll trade things, but being an investor is long-term, okay? So with that said, guys, let me check some analytics. Let's check some analytics. We've got 22 likes. That is a crime. There's 63 on here. Everybody click the like button. Let's start there. Click some likes. Click some likes. Click some likes. I'm not adding people to the indicator right now, just for sake of time. There's 1,000 something on the wait list for my free indicator. Get that like up. That's the first thing. The second thing I'd like to do is ask you guys a quick question. I want to ask you guys, what is the number one takeaway? It could be anything. What's the number one takeaway from today's live stream? And have you subscribed yet? Make sure you guys click that subscribe button and turn on the notification bell to get notifications next time I'm on live. We'll be talking about specific stocks. If you guys listen closely, though, I sprinkle in information. "41 likes now. Love it. What is the number one takeaway, guys, in the comments section? The number one takeaway that you guys are having. I got your comments loaded right over here. Always think long term. Great takeaway. I made the right choice from being a trader to becoming an investor. Okay. Don says, I like how you think. All right, Don. Claire says, long term is best and buy now. Your understanding of market dynamics is great, Bo. You should teach at Wharton. I don't know what that is. I'll pass. Change your thinking to long term, years instead of days. Amen. Amen. I've held a lot of these positions that we talk about for years. Great nuggets on the VIX and the TLT. Great. Opportunities coming. Amen. What else you guys got? By the way, guys, when you go to the channel, make sure you guys go over to my channel. And what it's going to look like, here, I'll show you what it looks like. I'll switch channels. So here you guys are right now, right? This is what it looks like on your screen. So when you guys go over to my channel, right there, click that like button, and then this is going to say subscribe. Click subscribe, and then what you do is you turn on the bell to all. That is how you know that you get notified for my next live stream. Let's see, what other questions? Long-term goal, time in the market's better than timing the market. Knowing where the market stands. Take inventory of your expectations. Man, I love these takeaways. Time in the market trumps timing the market. Amen. Don't let fear, uncertainty, and doubt fool you. Buy the dips. I love it. Don't be fearful. Maybe I calmed a person down today. See, my goal was to show you what was causing it. Maybe I calmed somebody down today. In times of uncertainty, in times of chaos, remember to be calm. It's all in your mind, folks. Everything is in your mind. If you create this like analogy in your head or this crazy situation in your head that everything is so bad and so terrible, guess what? It's going to feel much worse. If you guys are on Twitter like I am and you log on Twitter last night, it seemed like the market had just corrected by 50% in 10 minutes. I mean, those people were beside themselves. The market wasn't even down 10% at that point. Think about that for a minute. People overreact. Second, that I want to tell you guys, and I'm a hypocrite in saying this, but I'm not exactly a hypocrite because the title of my video is Why is the Stock Market Crashing? It's not we're all doomed. It's why is the stock market crashing? So one of the things that I want to tell you guys is part of the reason why things seem so bad is because if you go to CNBC and it says Dow drops 900 points, NASDAQ craters, oh my God, it's 3%, relax, craters. Does that make you want to click? Yes. And if I click, what happens? Advertisements happen on these pages, like right there on the right side. So I want you to recognize that. Part of the reason why it seems so crazy is that people get fearful and they want information, so they start reading articles, they start watching videos. And again, I said I'm sort of a hypocrite, but I'm not. I said, why is the stock market crashing? I truly answered that question. I didn't say we're all doomed for clickbait. I said, why is the stock market crashing? But recognize in times like this, those articles, that's how they make their money is by you clicking. And so that's why they do that. The stock market is the device for transferring money from the impatient to the patient. Amen. Think in 30 years of tomorrows. Yes. Sell something, invest early, build up your portfolio. Amen. All right, guys. I appreciate it. I hope you got some value out of this stream. If you did, again, click this like button. We got 51 likes. I'd appreciate it if we had a few more. Turn on that notification bell as always, and I'll see you guys on another live stream soon, okay? We'll see you guys soon. Have a great rest of your day. God bless, guys.